What's up, guys? Welcome back to DCA. So today what we're going to do is perform a price analysis of the most misunderstood, in my opinion, crypto asset in the entire market. We're talking about Chainlink. So on social media all the time, you hear things like Chainlink, it's garbage, it has no use cases. Chainlink Labs, they need to advertise more. They're running it into the ground, things like that. These are individuals, if you're hearing that type of information, and if you're hearing it from someone that you may potentially believe is knowledgeable about this space, you should run from that person because this asset forms the entire backbone of the DeFi space. People that are saying things like Chainlink has no use case are individuals who have a fundamental misunderstanding of the basic uses of this token. So Chainlink, what it does, just to give a brief synopsis, although if you're interested, as I said, I've done a deep dive analysis into this asset in a previous video just 2 or 3 weeks ago. I'll put a link to that in the description below. So in that video, we talked about the fact that Chainlink is responsible for providing accurate and reliable information to the DeFi space. Without that reliable and accurate information, every fund locked within a DeFi protocol is at risk. It's at risk to manipulation, it's at risk to hacks, etc. When you have data provided via Chainlink as the network, the data being provided to your DeFi protocol is decentralized, it's coming from numerous sources, and those networks have to pay Chainlink in order to receive that data. So Chainlink is not a retail token, and that's something people need to understand. But I quite frankly do not think that most people understand that fact. Chainlink is not used by the retail market. It's used by institutions and it's used by DeFi protocols. So you're going to see as the DeFi space continues to grow into the future, as more institutions come in, you're going to see that Chainlink is going to continue to grow in market cap for multiple reasons, primarily that those protocols require Chainlink to pay for data feeds. So you're going to see an increased demand as the space grows. In addition to that, when Chainlink staking comes out, the entire demand dynamic structure of the Chainlink token is going to change, and it's going to essentially move from a place where Chainlink is being demanded in small quantities currently by data service providers and node operators to a place where the node operators are going to begin hoarding Chainlink for the fact that if they wish to process transactions, if they wish to, in this case, a transaction being providing that data service to the DeFi protocol, if they wish to continue to provide that data, they're going to need to stake Chainlink. So you're going to see when staking comes out, the entire demand structure shift its position from where it's at right now to a much higher rate of demand at any given price. So in this video, what we're going to do is talk about where the price is at right now, because I think it's worth, in the prior video, we talked about the future. We talked about looking into 2025, 2026, but I think it's worth also considering where just the general market is at right now and where this price may go to, because quite frankly, when the next bull run comes around, or, as this space continues to grow, it's very likely that these prices that you're seeing right now, this entire range of prices that you see right now, you're not going to get another chance at these prices. However, it's still prudent to look at the market, understand what's going on right now, understand the macro conditions, and understand where the price may go to if the market continues in this bearish trend that we're in. So with all that said, let's dive in to the price of Chainlink, where we're at right now, where we came from, and where we're going. So this is the Chainlink USD, so the Link USD price. And we're looking at this with relation to the volume profile visible range. And what you can see is this is showing us essentially where high levels of volume have been traded for Chainlink, okay? So the way that these charts work, if you're unfamiliar, when you have one of these areas that protrudes out, These are essentially areas of high volume. And in areas of high volume, like we see here, anywhere from about $10 up to around $14, these are going to be levels of support. Okay. So we're sitting right now within a high level of support. You can think of this as the 2020 and beyond bull market. We're in that bull market support that was formed essentially from the middle of 2020. So, ever since about August of 2020, we've been trading right in this range. Okay. And this is going to be important. This point right here specifically is going to be important. These are areas of less volume. So right in here, for instance, and you'll notice that in these zones, in these areas where the bars don't come out very far, these are low volume areas. So every time that the price gets into this zone, you'll see that it kind of just floats right through it. So it doesn't spend ever more than a few days in between this area, or it will shoot right from the bottom up to the top. And that's kind of how those areas go. So there's not a lot of support or resistance in those levels. It's a low volume node. In other words, the price just shoots right through it. Conversely, when we're in an area like right here, this means a ton of trading has occurred in this range, and that sort of pans out. That's why every time we come down to this $12 level, this $12.50 level, we sort of get stuck right there. So in the past, it was acting as a level of resistance back in the early parts of 2020 and then, into the very early part of 2021 until we broke through. And ever since that time, this has been a general level of support. So, that's all well and good. So we could look above us, but, at the moment, I think based on everything we're seeing, there's not necessarily a lot of reason to believe the market is going up right now. Now, just to quickly show, our next large area of resistance, basically we would need to break above this $18 range. And above that, it's very likely that the asset, if we were able to break above this, $18 or $19 range right in here, if we were able to break above that, then it's very likely that we would head up into the mid 20s and meet resistance up in this area. Okay. So like right here. But based on what we're seeing in the market right now, let's take a more pragmatic approach. And let's take a look at the market from the position that things aren't looking good right now. We're not just talking about Chainlink. We're talking about Bitcoin, Ethereum, Solana, you name it. It's looking ugly right now. So, even if you head over to just the general stock market, we see that Google, for instance, has recently broken below this long-term trend line to the upside that it was forming. So, there's a lot of uncertainty in the markets right now. So if the general markets start to trend down, you're going to see the cryptocurrency asset class trend down. So let's take a look at where Chainlink may go to, where we might expect to find a large level of support as we trend down. Okay, so here we're looking at Chainlink, and I know it's ugly, and I know it's not, it's so much easier to come on here and say, I could twist this data and tell you, we're in this huge level of support right here. We're never going to go below this. We're, on the way up to 25 plus within the next 2 weeks. That's easy. Any channel can do that. But you know what? At the end of the day, we're here to have an understanding of both what the upside is, which we talked about in the fundamental analysis, and what the downside is. So when we take a look here, we're increasing the resolution of the data. And what we can see is there's essentially a few areas of support below us. So we're in this area right here, right at this $12 level. In fact, we could make this realistically right here. So this is a high volume node right here. But then notice that the volume trails off as you go lower and lower. So we don't get our next real volume level until we get down to about here. Okay. So realistically, if we were to head down, you're looking potentially at $8.50 up down to around $7. So that's ultimately where I would be looking for support to form for the asset. And depending on how bad it gets, you really don't have a large level of volume until you get down to this $5 level. So peaking at around $4 up to around $5. And very likely that's about as bad as it could get because you have a ton of volume right in this level, in this $4 to $5 level. Now, I know that's not going to be music to anyone's ears, but we're just looking at degrees of severity of this downturn. And, quite frankly, we don't even have to go into a downturn, but it's at least worth understanding where we're at, where we're sitting at right now, and what levels are below us. So you have these relatively low volume areas, anywhere from around $12 down to around $8.50. And then again, from around $7 all the way down to around $5. So these green areas are ultimately where, statistically speaking, you're most likely to encounter support. Okay. So that's how a metric like this is useful, simply for mapping out where support may occur and how, when you're in those levels, it's likely better to start acquiring the asset. If you're trending down, it's likely better to start acquiring in these green support levels than it would be to say, buying while it's flying down and you're sitting maybe at $10. Okay. So this just gives a basic understanding of where we're at and, depending on how bad this market gets, where we could go. Now, I want to move on to this next, and I think this is important. For anyone out there saying that Chainlink hasn't done anything in this market, Chainlink, it's dead, it's a dead asset, whatever. I want to show you how ridiculous that comment is. So Chainlink, 2018. We have Chainlink, and I've put up all of the other top assets by market cap back in 2018, at the start of 2018, during the bull market. Let's look at returns over that start of 2018 between Chainlink, and we're looking at Cardano, Ethereum, IOTA, Stellar Lumens, Litecoin, and Bitcoin. So these were all the top performers, or, the top performers by the end of the 2018 cycle. These all had the largest market caps. Let's compare the growth of these assets during that same time. So if we look at Chainlink, the growth of Chainlink from that time in the market until now, we have Chainlink, who has gained 8,000%, nearly 8,100%, and being as high as 32,000%. At this point, Chainlink has gained 8,000% since that time. If you compare that to Bitcoin, 400%, Cardano, 570%, Ethereum, 731%. And then you have other assets like IOTA that are down 25% from that time. Okay. So we're talking about assets here, which by orders of magnitude have grown less than Chainlink has over this same length of time. So it's no small wonder that, when people are up 30,000%, there were a fair number of holders back here in the beginning parts of 2018. There were not an insignificant number of holders. And if you didn't expect those individuals to start taking profits, then you're out of your mind. So that's something I think many investors don't look at. You'll notice that many investors in the crypto market don't know the use cases of what they're investing in, and B, don't understand where the asset has come from. Something that goes up 30,000% has created an absolute fortune for its early investors. So it only makes sense that the Chainlink development team, for instance, was selling some of the asset into the beginning of the bull market, because remember, they're using the funds that they make from this asset in order to grow their team. They have, something on the order of, I can't remember exactly, 300 to 400 employees, and they're hiring more. They're hiring another 200 employees right now. So they're creating networks, they're creating corporate partnerships, etc. And that costs money. So it only makes sense that the Chainlink development team was selling Link tokens into the bull market. Because if you want the network to grow, if you want continued research and development, continued new technological advancements, they're going to need money. It doesn't, it's not magic. These teams don't pay for themselves. So they're paying for these, the development, they're paying for the development team, they're paying for additional employees, they're paying to develop additional corporate partnerships by selling the token. All right. So that's what we saw here. And then what you had in addition to this was retail FOMO. You had retail FOMO from individuals in this asset class that don't understand what the asset's used for. They're just, oh, Chainlink's going up. Chainlink went up a lot in 2019, so I'm going to buy some. They have no idea what it's even used for. So you saw the price go up to these crazy levels here. In fact, if we look at the USD price back in May, it was up to $50. But quite frankly, there was no, it didn't make sense. These are retail investors buying into the asset. So that's what we saw back in 2021. You saw retail driving the price up. And then there's sort of that expectation that the price is just going to stay there. And so when it crashes down, because, the way that the demand structure is currently formed, there isn't enough demand at the moment to meet the amount of supply, the price is going to fall. And that's what you're seeing. But this is also presenting a buying opportunity for individuals who want to get into the market now, front running the staking process occurring. Because at that point, and as your DeFi space is growing, your demand structure right now isn't even close to resembling what it's going to. The demand for the asset is going to go through the roof when you have staking, when you have rewards for staking. Okay. So right now you basically have DeFi protocols demanding the asset to pay for fees. So you have a whole new element of demand that's going to come into the market once staking goes live. And that's going to be mass numbers of tokens being taken off the market and being held, essentially reducing the circulating supply. This chart essentially shows two things. One, it shows that Chainlink, there was a real demand for it. Notice that it was outperforming everything back in the bear market. Back in 2018 and early 2019, Chainlink was outperforming everything, while everything else was down, and down significantly, very likely. Many things were down at this point, 90% plus. At this point, right here, for instance, Chainlink was up around 1700%. There were no retail investors in the market at this point. So, I'll present you this question. If there were no retail investors, who do you think was buying the asset down here at these prices? So we're talking the middle of 2019. And if we just go look at the USD price back here in the middle of 2019, so at $2, for instance, who do you think was driving the price up? It was networks and DeFi protocols, etc. It was the in the know individuals in this asset class buying the asset up at huge levels in this level because of the fact that they realized just how important the asset is. So you were seeing everything else go down while very few assets were going up. And the assets that were going up, they were going up because of the fact of their importance to this market. Okay. So that's something that I think you really need to appreciate. And just to say one last thing here, let's take a look quickly at the coins and tokens back in early 2018. So I'm showing you the market caps of various tokens and coins back in 2018. So notice Chainlink was sitting at around $250 million at the time. Let's take a look at some of these other tokens. How many of these tokens that you see right here, A, can you even name or have you ever heard of? And B, how many of them have the same type of market capitalization that they had back then? And I can assure you, it's probably less than 1 in 10. Probably less than 1 in 10 of these assets that you're looking at right now is still at the same valuation now that it was back in 2018. So this just shows you, if you are investing in small market cap assets right now, as we're heading into a more bearish segment of the market, you really need to be careful because of the fact that much of this stuff, it's not like Chainlink. It's not, it's not instrumental to the asset class. It's quite literally, it's junk. It's junk that, now has a $37 million market cap, okay, compared to 421 billion. Think about that. It now has a $31 million market cap compared to 421 million back in 2018. Many of these. So this one had a $409 million market cap. Now it has a $6 million market cap. So consider that when you're investing into these, smaller cap, lesser known assets that don't necessarily have a real use case. So here's another one, $10 million coming down from $250 million. And even many of these that had, $1 billion plus market caps. So Nano, for instance, now has 270 million compared to its, nearly $3 billion market cap back in 2018. So that just goes again to show what Chainlink was doing during this bear market. Its market cap was growing while lots of other assets, the market cap was rapidly shrinking. And that's something to watch for. That, I think that's a very important lesson. When we do head into more bearish segments of the market, watch to see which tokens are retaining value or even increasing value, especially if they're perhaps some of these smaller assets, and then investigate what the use case is. Try and understand the asset. Try and understand what it does, and is it actually important? So, if you would have been in the market back here in 2018, 2019, as everything else is plummeting, but Chainlink is on the rise, and you're one of these people who was saying, oh, Chainlink, no use case. Well, you deserve not to have been able to buy in at this time because you didn't have the intellectual curiosity to investigate what the asset actually does. And as an investor, if you're just buying into something because you're seeing some green candles and that's your only metric which you're using to determine whether you should be investing into the asset or not, I think then you're going to be someone who's continuously getting wrecked. So all I want to say is, as investors, we need to understand what's below us, where we could be going in more severe circumstances if the market continues to bleed. But at the same time, we need to understand that Chainlink is very likely going to continue to get hurt in the shorter term timeframes. But when staking goes live, when the market starts to pick up again, you're going to see it absolutely explode. And ultimately, I think you're eventually going to be looking at an asset that's worth multiple hundreds of billions of dollars. As I said in the fundamental analysis video, I'm predicting that if the DeFi market grows to a capitalization of greater than $1 trillion, as many are expecting it to do, then you're going to see the total value secured of Chainlink, which is essentially the amount of DeFi that Chainlink is responsible for securing. You're going to see that continue to rise because Chainlink, again, as we said, has no competitors. And therefore, you're going to see the price just blast through these levels. These levels of demand do not represent what Chainlink is going to become in the future. So if we're so fortunate that the price does head down to these lower resistance levels, I think it's going to be, at the end of the day, the buying opportunity of a lifetime. So that's it for this one, guys. Until next time, as usual, see you.